Welcome back, and yes, the DeFi pump is here. As we've been talking about, the Bitcoin trade, in my view, is over, at least for now, at least for this period of time, as we're entering the second half of 2025 and the end stages of what I believe is the end stages of the bull market, because we know 12 to 18 months after the Bitcoin halving, which occurred in April of last year, 2024, the 12 to 18 month time frame is when you see the most volatility, the most upswing, and the end of the bull market. Now, there's a lot of people out here that say, but Cryptoviser, there's no way that we are going to have the 4-year cycle, even though Bitcoin is literally on a 4-year cycle. We've been studying the 4-year cycle on this channel since 2018, and we upload every single day. So make sure you guys do give this video a free thumbs up and also hit subscribe. That way you never miss a new video. But we're seeing a lot of, sentiment in the Bitcoin space about, Metaplanet, MicroStrategy, all these different Bitcoin friendly or Bitcoin treasury companies. But at the end of the day, we still have to understand that cycles work. Just like when you're on a roller coaster, you don't want it to end, but it ends. You know what I mean? Like, you don't want to stop for gas, but if you don't stop for gas, everything peters down to nothing, right? And so what is going on in Bitcoin right now is the Bitcoin treasury companies, they are now the new standard, right? They're the new floor. So if they stop purchasing Bitcoin, even to a small degree, what do you guys think is going to happen to the price of Bitcoin? It's going to drop because they're the ones holding the market up. And we're not even being held up that high, to be honest, because people thought we were going to hit 200,000, 300,000, 400,000 this cycle. And we could barely get through 110,000 with tens of billions of dollars entering the crypto space. And so in today's video, we're going to be talking about where the money should be moving now. And it's not just what I believe, it's what we are seeing going on in the market, what we're seeing, the narrative shift, the sentiment shift. And when that starts to occur, you got to be very rapid, very quick, because by the time most people realize, I need to get out of Bitcoin and go into this coin, it's too late, right? Because they waited too long. They didn't follow where the money flowing and the market flows and the sentiment flows are. And so in today's video, we're going to break it all down. I'm going to give you guys my opinion now that the fear and greed index is smack dab in the middle. Do we buy? Do we sell? Do we do nothing? Well, doing nothing is still a decision, and it may not be right for your portfolio. But we're going to be discussing that in today's video, and we have a lot to discuss. Crypto companies, publicly traded companies. We're going to talk about Hedera, Ethereum, BitDigital, Polygon, Aave, Aptos, and much, much more. So make sure you guys are subscribed. Give the video a free thumbs up, and let's get right into the video. So one of the things that we've been talking about is MicroStrategy as an example that is holding Bitcoin. This is kind of like non-productive Bitcoin. It's just sitting there. Metaplanet now plans to leverage their growing Bitcoin treasury to acquire a digital bank and a cash-generating firms, according to the Financial Times. Now, Metaplanet is a Japanese company that is basically following the MicroStrategy thesis on buying Bitcoin and taking out debt and buying more Bitcoin. And so their CEO told Financial Times that Metaplanet was in a Bitcoin gold rush that could serve as a launch pad to expand into more areas like digital financial services. However, it's still really, really, really early days in Metaplanet's plans to buy other businesses, he stressed. Well, if you're not buying anything and you're just buying the Bitcoin and then the market goes into correction, then what do you have, right? That's the issue. MicroStrategy, they have a little bit of cash flow from their software business, but it's not enough to offset what they're doing from a debt perspective. And it's not MicroStrategy, it's Metaplanet. And a lot of what's going on now is companies are looking at like, is that the play right now, or do we wait? And again, a lot of companies that are potentially going to put crypto on their balance sheets at some point in the future. By them not acting, they are missing, and they may have missed this whole cycle to get in on that, to get the financing for it, to potentially have the cash to buy at lower prices, right? We just talked about the other day that Anthony Pompliano's company is going to be acquiring Bitcoin, and they're acquiring Bitcoin at literal all-time record highs in the 12 to 18 months after the Bitcoin halving, when historically it's the end of the bull market, right? So where does that leave the rest of crypto? And by the way, a lot of people are saying, well, Bitcoin's not done yet because Elon Musk is now saying his new political party will support Bitcoin, saying fiat is hopeless. Yeah, but this is not new. We already knew this, right? I mean, the whole point of Doge was to get the debt in, at least the deficit, in some type of order, and spend less so that we can pay off the debt and the dollar can stay the world reserve currency. But clearly that's not happening, and they're going to keep printing and printing and printing and printing and printing. And so, yeah, I mean, why would they not go to crypto or be pro crypto at this point? But meanwhile, there is a shift going on into DeFi, into Ethereum, into DeFi related ecosystems. And they're taking the MicroStrategy playbook. They're taking the Metaplanet playbook. And this is why I say, like, they're when these big companies want to make money, they're going to look at the next best thing. And so I believe the Bitcoin trade is over for now. It may continue and we may go much higher. I don't know. But I think that we're starting to see, and I've been talking about this a lot on the channel, that the rotation is underway right now. By the time you're watching this video, the rotation may have already occurred. Okay, because it's literally underway as I'm recording this. BTCS, which we've covered in the past, a publicly traded company, announces intent to raise $100 million for a strategic Ethereum acquisition using DeFi and TradFi flywheel. Now, I want you guys to pay attention because what BTCS is doing is very, very interesting, and it's also utilizing the DeFi ecosystem, because the DeFi ecosystem is not unproductive money, right? You can stake it, you can earn yield on it, and other publicly traded companies are doing the same thing. But before we go to the other companies, let's kind of break down what BTCS is doing. Now you can see here the stock has obviously in the last week gone up by 50%. It looks like this was potentially, a lot of volatility over the last year. And this stock specifically over the course of, crypto, a lot of volatility, right? Because they are a very flexible type of company, but now they're going to raise $100 million for Ethereum. So BTCS, a blockchain tech focused company, announced its strategic intent to raise $100 million in 2025 to acquire Ethereum. This is part of the company's long-term vision to be the leading publicly traded company focused on Ethereum infrastructure while remaining one of the largest holders of ETH among public companies. The CEO of BTCS said, "We believe that Ethereum has significant growth potential and is central to the future digital financial infrastructure. Now, with Ethereum at 2021 level prices, is the time to deepen our exposure. Our approach to capital formation has been and continues to be designed to minimize dilution, maximize flexibility, and align with commitments to sound financial management and protection of shareholders." And so this initiative will expand BTCS's Ethereum first strategy, leveraging cutting-edge financial models that combine both DeFi and TradFi mechanisms. The planned capital raises will be structured through DeFi and TradFi accretion flywheel, consisting of at-the-market equity sales, selling shares on the open market, convertible debt issuance, on-chain borrowing via Aave. Guys, I'm going to read that again. On-chain borrowing via Aave. So BTCS is going to be borrowing money on Aave, a DeFi protocol, to then go and purchase more Bitcoin. This is something Michael Saylor can't do. He has to go to TradFi. He cannot use the DeFi rails because Bitcoin is not DeFi compatible. And so they're also looking at yield generated from Node Ops, which is staking Ethereum, and vertical integration with Builder Plus, which is block building, one of the most advanced opportunities for driving revenue and increasing Ethereum per share while minimizing dilution. So very interesting how they're going to be doing this flywheel, right? So effectively, this is how it kind of goes. ETH purchases and revenue generation boost Ethereum per share, the stock price, and the MNAV premium, enabling additional capital raises. So they're going to do strategic capital raises. Then they're going to do DeFi. Lowest cost of capital borrowing on Aave is around 3% per year. TradFi is above market convertible debt and at the market sales. Buy more ETH, generate more revenue through the other things that we talked about, like staking and Builder Plus. Then the share appreciates. They sell more on the open market. They borrow more. They buy more. They generate more. this is the flywheel. Now, it hasn't really started yet, right? Ethereum, the bull run, I mean, we haven't really had a bull run, right? The price has moved and we've had volatility, but it is like one of the least performing coins in terms of percentage gains. I mean, even compared to Bitcoin has done an 8x from 15,000 to 110,000. And Ethereum, you can see it hasn't really performed. It's kind of almost been sideways trading. We went from 1287 up to 4,000. So that's basically like a 3x, and then came back down to where we are today, basically double what that cycle low was from 2023. And so there's a lot of people who say, like, well, why is the price not going up, right? That you know that there's value in the ecosystem. You know that this is going to, this whole ecosystem of DeFi is going to and is challenging TradFi. And so these companies are seeing, right, what is the next best thing after Bitcoin? Well, it's Ethereum. It's not Solana. It's not Sui. It's not Hua Coin. It is Ethereum. And so we're also seeing Bit Digital, another publicly traded Bitcoin company. And by the way, this was a publicly traded Bitcoin mining company, BTBT. It's about a $1.1 billion valuation, had a drop earlier in like a few weeks before they made this announcement to about $1.90, and we've already doubled from there. Bit Digital swaps their entire treasury into Ethereum, saying it's now a top public Ethereum holder after a $173 million splurge on Ethereum, right? They're buying up Ethereum like crazy right now. Crypto mining and staking firm Bit Digital said that it completed a conversion of their entire corporate treasury from Bitcoin to Ethereum. And by the way, I've been saying this literally for weeks, guys. People are selling their Bitcoin. People are like, no, Cryptoviser, nobody's selling their Bitcoin. It's like, first of all, clearly they are, because people are buying and the price isn't moving. But people are dumping their Bitcoin. We are at the top of the market. No, Cryptoviser, we're not at the top of the market. Okay, you literally have a publicly traded company dumping years and years of acquisition and mining Bitcoin, gone. All that Bitcoin they sold, because they understand where we are in the cycle, and they understand if they just sit around and say, well, should we get into Ethereum? Should we not get into Ethereum? I don't know. Let's kind of wait a week and see what happens with Bitcoin. And then Bitcoin, tells them more, go to Ethereum. And then they're like, well, let's wait a little bit longer. If you are not decisive in your investment thesis or strategy, you're gonna lose, right? You're gonna lose potential upside. You're gonna lose with the potential downside, right? You have to have a thesis on this market. A lot of people don't have a thesis. That's why they get angry when you say we are at the top of the market, because they're like, no, Cryptoviser, I just bought my crypto at $108,000. Like, okay, but that doesn't mean that the market isn't at the end of the bull run, right? And so we are looking at what the big money is doing. And if the big money does something, and then more big money does the same thing, and more big money does the same thing, and you're sitting on the side like, I'm going to wait a little bit, you're gonna miss it, right? Because by the time you make that decision, I'm getting into Ethereum, the trade is already made. And that is where FOMO occurs. And then you become the exit liquidity, right? The fact that we are starting to see these companies moving into Ethereum, right? We have Bit Digital, BTCS, SharpLink, BitMine Immersion Technologies. These 4 companies in a week. There's going to be more. And they're going to be buying. And people are going to be hearing about this. They're going to be hearing about it's not just affecting Ethereum, it's also affecting the entire DeFi ecosystem, because they're also using Aave to borrow. Anyway, Bit Digital also said that they liquidated 280 Bitcoin worth over $30 million and used the proceeds, along with 173 million in gross proceeds from share offering, to purchase more Ethereum. Bit Digital says that they now have over 100,000 Ethereum following the crypto treasury shift, up from 24,000 Ethereum held at the end of the first quarter of 2025. They made a decision, they executed on it, and that's it. There's still people watching this video that are, I'm not really sure if Bitcoin topped out. It's like, okay, you keep waiting. You keep waiting for $250,000 or $450,000, and you're going to miss the rest of the market. Now, I'm not saying it's not going up to that price, right? But all the signals are, guys, the companies that their business is Bitcoin are completely shifting away from Bitcoin. It's not saying Bitcoin's not going higher. It's just saying this is not the trade right now. This is not the market in front of us. The market in front of us is telling us Bitcoin is topping out. The market in front of us is telling us Ethereum hasn't reached all-time record highs. The market in front of us is telling us that Wall Street is shifting to Ethereum. I can keep going on. You guys get it. And don't forget to give this video a free thumbs up. We got a lot more to talk about in this video, including Hedera, Polygon, Aave, Aptos, and much more. So let's get into it. So they say that Bit Digital, they said, we believe that Ethereum has the ability to rewrite the entire financial system. We are starting with exposure to over 100,000 Ethereum for now, but we intend to aggressively add more so we become the preeminent Ethereum holding company of the world. Bit Digital taking over. And by the way, their CEO, Sam, even wrote in regards to Sean Adams saying it's a three-way race to become the first Ethereum treasury company at over $1 billion of Ethereum holdings. He said, we want to win this race. We will be aggressive about it. They're already at 100,000 Ethereum, which is about, I think, $250 million, $2,500 times 100,000. Yeah, $250 million worth, right? So they're a quarter of the way there. And this is at basically cycle lows for the price, right? Because we're closer to cycle lows than we are to all-time record highs. And so the Bit Digital CEO was on CNBC, and he talked a little bit about their strategy. And I think that it's important that you guys listen to it, right? Because again, this is not me saying this. This is a Wall Street CEO that is executing on the strategy that they have pivoted, right? And this is okay to pivot. I remember right before FTX collapsed in 2021, in October of 2021, I told my viewers, I said, guys, we're approaching the 1 year from the top of the market, which tells me we're either at the bottom or we're going lower. This may be a good time to kind of look at your portfolio and potentially reposition it. Cryptoviser, how could you be repositioning in a bear market? That's ridiculous. 2 weeks later, everything collapsed. And while everybody was worried about whether Binance is going down, Coinbase is going down, Grayscale going down after Sam Bankman and FTX went down, people on this channel that executed on that strategy, we were buying $15,500, right? The literal cycle low. And so, yeah, I mean, you can do nothing or you can, make decisions. And some of the times those decisions are doing nothing in your portfolio. That's totally okay if that's your thesis. But if you're like, well, I really want to get into Ethereum, but I think we're going to go lower. It's like, guys, Ethereum is double the cycle low, right? Yeah, could we go lower than that? Sure. But we're double the cycle low, only 100% gain since the cycle low. I think we're going much, much higher, right? And all of this data that I'm literally presenting to you is proving my thesis before it even has played out. Let's continue to listen. Let's listen to what he says.
Coming from an institutional background, I've been in this space for many years, and I feel like many investors felt like they missed on the Bitcoin wave.
Again, CEO of Bit
Ethereum
Digital.
represents that next wave. And, we're not just buying a coin, we're putting our reserves into a protocol that powers trillions of on-chain activity. We believe Ethereum is becoming a new category for as a strategic corporate asset, like gold and treasury bonds once were, but with one difference. Ethereum is alive. It moves with technological innovation.
Yep.
It has tens of thousands of developers on chain, more than any other blockchain, including Bitcoin or Solana. And also, Ethereum captures real activity, real economic activity. As stable coin volumes grows, as tokenization becomes a thing, the fees generated by that activity flow back to ETH holders. And Bitcoin does not participate in that feedback loop, in that value loop. We believe Ethereum is where economic throughput is frankly heading.
And by the way, 100% accurate here, right? There's this is what we were just talking about, right? The Bitcoin in MicroStrategy, it's non-productive Bitcoin. They're not loaning it out. They're not I mean, I guess they kind of are loaning it to themselves to buy more Bitcoin, which is the risk, right? But it's not productive capital. Because even if you, like Michael Saylor's thesis is that, well, it's going to outpace the rate of inflation, which I agree. I'm not saying there's anything incorrect about Michael Saylor's thesis, but it's not as lucrative for Wall Street as Ethereum is, because Ethereum, they know you're going to get a yield on Ethereum, or you can loan it into another ecosystem and then stake on another ecosystem. So there's a lot more you can do with Ethereum versus Bitcoin, and building the companies, like we were talking about, Metaplanet wants to buy financial institutions and all of this, but that is just leveraging TradFi. It's not really utilizing DeFi, which is the whole point of the whole blockchain ecosystem, is to transform the way that we think about money and how the financial system operates around the world. So something to think about. Let's continue listening a little bit more.
Now, Bit Digital raised about $172 million and is using that capital to buy ETH. The company also sold more than 417 Bitcoin, which was the firm's entire remaining Bitcoin position.
So profitable.
We want to hear from him.
And will that capital be used for anything else? What are your plans?
That's right. We sold a profitable business. We exited a profitable business, Bitcoin mining, and we took the cash on our balance sheet and we sold all our Bitcoin, and we did this raise. I actually personally participated in that raise myself with my own savings, and we poured that all into Ethereum. We now have 100,000 Ethereum we have accumulated about 100,000 on our balance sheet, and we're just getting started. That's just the start. We're just getting warmed up.
We have seen growing.
And so what I want you guys to understand about this is, right, they're completely changing their entire business. And you think that you can't change your thesis. You can't identify that we're at the top. Like, these are indicators. People are exiting Bitcoin now, and they're looking for more yield. And by the way, how I was saying that, like, you not making a decision is making a decision, and you'll sit by, like, the price of Ethereum has barely moved. And this is just the beginning. Like, they've already made the purchase, and there's no movement in the money yet. In the price yet, right? That means that the market hasn't, at least when I'm recording this video, maybe it changed by the time you're watching it, but the point here is that the market hasn't priced this in yet. It will, but it hasn't yet. And so the focus is still on Bitcoin right now, but it's starting to shift. And so that's Bit Digital. We're also seeing coins moving, which is another indicator of where we are in the cycle. Ethereum OG moves $2.2 million in Genesis coins after 10 years of hodling, right? So the address received the coins when the ETH was worth less than 50 cents. And so we're seeing the same thing happening in Bitcoin. And sometimes this is reshuffling. Sometimes this is private sales, right? Maybe Bit Digital is buying the Ethereum directly from private sellers. Maybe SharpLink is doing that. I don't know. But again, this is exit liquidity. People who want to exit their position and they see Wall Street money coming in, that is when they exit, because they're not waiting for you to buy, because they have a lot more coin to sell than you're going to buy. It's not about you and me. It's about Wall Street at this point. And in the future, it's going to be probably about governments, right? But also I want you to remember, right? Robinhood chose Arbitrum, which is powered by Arbitrum, but it's settled on Ethereum. Ethereum is the driver of the entire DeFi ecosystem. Layer 2s built on top of layer 1s. Bitcoin doesn't have that. Bitcoin doesn't have loans. Bitcoin doesn't have borrowing. Like I just showed you, Bit Digital is taking out loans on Aave to buy more Ethereum. You guys understand what that means? It's pretty big. Anyway, moving right along, we're now hearing that Hedera has now been chosen to be part of Grayscale's Smart Contract Platform Fund. And by the way, if you're up to this point in the video, make sure you guys are subscribed to the channel. You can also become a channel member for as little as $1.99 a month. Thanks to all the channel members. We see a lot of you are joining the channel. We have a few different tiers. One is $1.99 a month, and we have some higher tiers. But if you guys can't afford it or don't want to pay, at least just give a video a thumbs up. So we've been talking a lot about Hedera and the fact that Hedera is controlled, right? The council that runs Hedera is controlled by, I think like 20 or 30 like multi-billion dollar global conglomerate corporations. And so the fact that people think that Hedera is not going to do well from a technological standpoint and from a price perspective, I think they're missing the point here, right? Because Hedera has the backing of the biggest companies in the world, and they're going to utilize blockchain to make their processes and supply chains more cost efficient. That's for sure. And so whenever we see something like this, we have to look at it and understand what this means, right? Number one, it means that we're seeing more cryptos entering the Wall Street kind of game, right? Even meme coins, for instance. This is going to become the norm. But it's also really important because it's building exposure to other funds or investors that may not have invested in crypto before, or may not want to figure out where to invest, so they look for funds. It's the same thing like investing in the stock indices. I get asked a lot by people who don't watch the channel or don't know that I have a channel, like, what do I invest in? They're like, oh, do you invest in index funds? I'm like, no. I invest in like individual stocks and cryptos. And they're like, well, why? Why not an index fund? I said, because this is what I do every day, researching these markets. And so I know where I need to invest, what areas are picking up narrative or picking up Wall Street interest. But a lot of people don't have the time for this. And so even to watch my videos, people complain, oh, Cryptoviser, your videos are too long. It's like, watch it faster. There's a little setting on the bottom. You can watch it 2x if you want. And if you have YouTube Premium, you can watch up to 4x the speed. So, but a lot of people don't do research, or they don't know how to do research, or they don't want to do the research, right? People are not as interested in crypto as we are on this channel. So these funds are very, very important because they give people access to the crypto industry without having to do the work or the research themselves. Obviously, there's still risk involved, but as you see, like, it's more spread out, and people have more exposure to the individual cryptos without having to say, well, is this a good crypto? Is this a good crypto? Is this a good crypto? And by the way, these are based on the top cryptos, because some people are going to say, well, Cryptoviser, well, why is Cardano here 20%? I don't know. I really don't know why it is. Sui is there also. Why is Sui there, right? They're focusing, I'm guessing, on the top smart contract platforms by market cap. That's what I'm guessing they're looking at. I think that as time goes on, they're probably going to look at more of other metrics on these blockchains. But for now, that's what they're doing. But congratulations to Hedera for getting on Wall Street funds. And we've also been talking a lot about Polygon here. And by the way, HBAR, I've been getting asked, like, Cryptoviser, what do you think about HBAR as a crypto? I mean, we've been doing a lot of research into Hedera on this channel in 2025, and it does seem good. The market cap, I definitely like lower market cap coins because I think there's more potential there, right? I mean, we have airdrops that are about to be happening, and they're saying that these airdrops are going to be worth $10 billion at launch. And meanwhile, Hedera, which actually has the largest corporations in the world, they're only $6.8 billion. So all those other airdrops or coins that are being created, that they're like, oh, we're $10 billion, $20 billion. No, it's not. And that includes some of the ones that are already in the top 10. Hyperliquid, not worth $12 billion. Sui, not worth $10 billion. No way. No way. Because look at Polygon, right, which we're about to talk about right now. The premier layer 2 in the world, and it's basically $2 billion in valuation. That's absurd. It really is absurd. The Polygon is a team building super fast highways of the internet of blockchains. There are two old ways people tried to do this. One way says, let's build lots of roads, each going their own direction. That gives freedom, but it make things messy and hard to use. Another way is let's make one big road for everyone. That's easier, but it gets crowded fast. Polygon's approach is why not build many roads and connect them smartly? They call this the ag layer or the aggregation layer. It's like a well-planned city where everything flows smoothly. That's how Polygon wants to help Web3 grow as big as the internet without traffic jams. And Katana, another layer on top of it, right? It's a DeFi chain forged to bring dead bags to life via deep liquidity and real yield. And it's incubated and built on Polygon. And by the way, we've covered Katana in previous videos, so make sure you're subscribed. That way you never miss any of our new videos. And so that's what they're talking about with Polygon, right? Polygon is the engine, it's the foundation layer for all of this connectivity into the different blockchains, into the different ecosystems, into the different interoperability layers. And so Sandeep, who is the founder of Polygon and kind of took over the Polygon Foundation recently to kind of re-gear it and reinvigorate Polygon, the same way that Ethereum Foundation did with Ethereum. And so he said, hard learning of life is as you grow older is nothing happens in 5 years. To build a long-lasting company or protocol, you need a minimum of 10 to 20 years. The balance in the game of life is you need to play, the balance in the game of life you need to play is to do activities that compound over time while staying relevant in your current context. He said, it's my 8th year at Polygon, and every other day I feel this is just the beginning. And so this is in response to a recent interview that Sandeep, the founder of Polygon, had on this this podcast, talking about the 20-year vision for Polygon. And people are like, 20 years? Because I've been on this channel since 2018, right? It's quite a long time. He's been with Polygon for 8 years. Dfinity and Internet Computer have been around for 10 years. There is, like, the time flies in these ecosystems, and people don't realize, because they get caught up in the hype of this cycle, and then they don't think about it for a few more years. But the bottom line is, like, there's a lot of work that's being put into these protocols, at least most of them. And to get these products shipped, it takes a lot of time, energy, money, resources, and dedication as well. And so we have to understand where these blockchains are going for, right? Years ago, the focus was on the price. The focus was on pumping the price. Now the focus is on real capabilities, real technology building, real implementation, so that you have this kind of long-term track for this technology to continue to succeed. This is very different than what it was a few years back, right? Where it was only about pumping these coins to oblivion. But now we're seeing which projects really meant what they meant, and which projects were just trying to pump their bags and extract as much value as possible. We're seeing that because Polygon, Ethereum, the Ethereum ag layer, this is real capabilities that are being deployed on a regular basis on Polygon and Ethereum. And there's people in other ecosystems that promise things for years, base level integrations of technology that every other blockchain has, and they still don't have it, right? They promised and they didn't deliver. And what I see with Polygon, what I see with Ethereum is, have they had bumps along the way? Yes. I mean, I'm personally more bullish on layer 2 than I am on layer 1 for Ethereum, because I think that the layer 1 cannot handle what the layer 2 can handle. And so the actual, the growth for Ethereum is going to come with the layer 2s. The layer 1, Ethereum, I'm bullish on as well, right? I think Ethereum's layer 1 is going to do well, which is also going to help layer 2. But layer 2 is the one that powering the expansion of the network. And so understanding what Katana is, what the ag layer is, how they're building all these connectivities to these different ecosystems. This is very similar to what we're talking about with Hedera utilizing Dfinity technology to power their AI capabilities. Instead of trying to reinvent the wheel, create their own side networks and all of this, they're utilizing the technology that's already out there through interconnectivity. And this is exactly what the ag layer is. Obviously, it's another ecosystem and they're not using ag layer, but that's essentially what Polygon is building, right? They're building this ag layer to connect all of these technologies, all of these different technologies and different kind of focuses together. And what do you think the banks want? They want interconnectivity. They want things fast and they want things cheap, right? Aave has now led DeFi for 3 months with $7.5 billion of flash loan volume. Is a $300 breakout imminent? Now, Aave is a very interesting DeFi protocol to I don't know, look into, because it did a very interesting move last year. You can see it right here well, let me pull this out a little bit further so you can see. Yeah. So the low over the last year and a half or so was kind of in the $80, $90 range. Then we started to see the move up. And a lot of the move up at the end of last year, what people call the Trump pump, right after the election. But a lot of it was also because World Liberty Finance, which is the Trump crypto venture, they were buying Aave and talking really good about Aave. And why? Well, Aave is building a lot, and Aave is one of the premier DeFi ecosystems for lending and borrowing on chain. And Bit Digital is using Aave very clearly. And based on the on-chain data, Aave has dominated DeFi sector for 3 consecutive months, processing over $7.5 billion in flash loan volume throughout 2025. The lending giant commands $24 billion of the $110 billion secured across DeFi protocols. That's basically about 20% of the entire sector's TVL. Aave, they talk about the return. So Bitcoin posted a 23.35% gain during the period, where Aave returned a 37% gain. Aave maintains dominance as the largest use case for wrapped Bitcoin on Arbitrum, accounting for over 30% of the network's 8,100 wrapped Bitcoin supply. Aave is the largest use case for wrapped Bitcoin, accounting for over 30% of the network's supply. This protocol currently holds the distinction of being the only DeFi platform to maintain at least $1 billion in TVL across 4 major networks, including Ethereum, Arbitrum, Base, and Avalanche. So you can clearly see that Aave is being used. Aave is the leader in a lot of DeFi metrics, and the price has performed, right? We've done a lot of round tripping here, right? We went all the way up, came back down, all the way up. And potentially with an Ethereum breakout and the Ethereum ecosystem gaining more traction from Wall Street and all of that, and the usage of Aave, what do you think is going to happen with Aave? I mean, literally, you guys have to understand, like, Aave is on par with banks. Like, that's where they are. They're basically doing what banks do, but cheaper, faster, probably more efficient. And again, we are in a bull market, so loans and stuff like that kind of get a little risky towards the end of bull markets, because you guys remember. Here's the deal: in a bull market, these protocols are going to do well, but once you start to see the rotation into the bear market or out of the bull market, these loan protocols, I would run for the hills, because, this happens in the housing market also, right? Loans are expensive right now, or more expensive than they were. Everybody's been anticipating a drop. We're not getting the drop from the Federal Reserve, and so people are just holding the price steady. But now more homes are going on the market. More people can't afford the homes. More people are not buying the homes at these prices, and you're starting to see prices coming down. Some are not, but eventually they will, very hard. And so we have to keep that in mind with Aave. It is a loaning and DeFi protocol, and so in a downturning market, it could really not do that well, which makes sense, because now in an uptrending market, Aave is doing very well and has been doing very well for the past basically year or so. Anyway, in terms of other real-world asset, total value locked with DeFi, Aptos Network has increased 56% from a TVL perspective to $538 million in the last 30 days, becoming the 3rd largest real-world asset network after Ethereum and ZK Sync era, with nearly $420 million in private credit, $86 million in US Treasuries, and $30 million in institutional alternative funds. And so if you go to the Real World Asset website, you can actually see here Aptos, $537 million. It's a 50% of from 30 days ago. And why is this? Well, I don't know the answer to that question, but I think that there's a lot of just, again, rotation out of Bitcoin and out of the Bitcoin focused companies. And they're just moving into Ethereum adjacent products like Aptos, coins in the DeFi space or connected to the DeFi space like Aave. And they're putting their money there. And the companies are doing the same thing. And they're going to be utilizing these protocols as well. And this could put us into, alt season, which everybody's been begging for and asking for. Now, are we going to get it? Is it going to last as long as people want? I don't know. But again, the longer you are not making a decision in your portfolio, the more likely other people are making decisions, and they're going to, act on those decisions in their thesis, and either sell Bitcoin, continue to hold Bitcoin, and you have to make quick decisions. This is why I've been saying for years on this channel, you have to have a thesis and you have to have a strategy. If the crypto hits this price, I'm going to sell it. If the crypto hits this price, I'm going to buy it. And just be open to changes in the market, because while a lot of people are focused over here at MetaPlanet and MicroStrategy and all of that, they're missing the point that people are rotating out. Companies are rotating out. And they're not just selling Bitcoin, waiting for Bitcoin to drop. They're changing their whole business model, saying effectively the Bitcoin trade is done for now, or it's not as profitable. Because as you heard from the BitDigital CEO, he said that they had a profitable Bitcoin business, and they dropped it all. Why? Because they think that you can be more profitable with Ethereum. And so people are going to start questioning that, testing that, seeing if that's accurate. And not just Ethereum, by the way, but all of the DeFi layers and the layer twos and the adjacent chains to Ethereum to see which is better, right? Because effectively, people are going to be saying, well, Cryptoviser, next it's going to be Solana after Ethereum. It's like, Solana may have already had its day, and all it showed us was meme coins and Haktua coin. They haven't shown us any real growth from a DeFi perspective, or from an ag layer perspective or a layer 2 perspective. Solana hasn't done any of that. It's just been meme coin after meme coin and Haktua coin and celebrity coins and rug pulls. That's it. So that's not going to be after. I think that it's Ethereum and everything on top or built under Ethereum, including Ethereum adjacent chains. But if your chain doesn't have the capabilities that Ethereum has, interoperability, smart contracts, DeFi connectivity, stable coins, the chain is done. And I'm not talking about Ethereum. I'm talking about the chains that don't have those things. So very interesting. Aptos, you can see here $1.26 billion in stablecoin market cap on Aptos. I want you to think about, there's other ecosystems out here in the top 20, and they have like $20 million in stablecoins. And it's not even regulated stablecoins or USDC or Tether. It's nothing. They have no stablecoins. And Aptos, which I don't even think is in the top 20, it probably should be. Aptos is number 34, $2.8 billion, right? We have PP Coin has a higher market cap than Aptos, and PP Coin has 0 stable coins on it. Like, does that make sense? Should the market correct that? And that may mean Aptos goes higher and PP Coin goes lower, or one or the other. But yes, it's overvalued. It's clearly overvalued. And Aptos is clearly undervalued. Polygon, clearly undervalued. Right? Aave, clearly undervalued. Hedera, clearly undervalued. And so what do we do about this? Well, we can say we're not going to do anything. We're going to sit and wait. But again, if you wait too long to sell, to buy, or to do nothing, you lose, right? Because if you wait too long to sell, if you say no, Cryptoviser, we're not at the top. It's like, okay, great. We're not at the top. What price will you stop loss yourself at, right? Maybe not actually putting a stop loss on the books, but having it in your thesis. Well, if Bitcoin hits 85,000, I'm out. I still am in profit, but I'm out because it's probably going lower. But then you don't make that decision, and then Bitcoin goes to 50,000, and then you end up panic selling. Or Bitcoin goes to 200,000, and then you panic buy. It can go to 400,000 tomorrow. I ain't buying another Bitcoin until we get a drop, period. Even a portion of a Bitcoin. Because if we go to I'm not buying $400,000 Bitcoin. No way. No way. If it goes to 50,000, yeah, I'm going to buy Bitcoin. But for now, we're not there. And so the trade for Bitcoin is over, at least for me. The Bitcoin trade is over this cycle. Could we go higher? Sure. But we are seeing the rotation underway. And this is the DeFi pump. And it's probably the final pump of the cycle. I want you guys to understand that. I believe this will be the final pump of the cycle. And what does that mean? Like, people are like, well, Cryptoviser, it's going to be over. It's like, no, it's not going to be over. But the cycle may last, maybe, let's say the cycle's over, okay? Let's say we're going to rotate into a bear market. The bear market may only last for 6 months, 7 months, maybe a year. I mean, we have the most pro-crypto president, the most pro-market president, probably in our lifetimes. And the whole administration, the Treasury Secretary, the Office of the Comptroller of the Currency, the SEC Chairman, I mean, they're all pro-crypto and pro-markets. And by the way, pro-markets going higher. And so for me to think that we're going to be in a bear market forever is ridiculous. We're not going to be. But you want to be positioned so that when we do enter the bear market or corrective phase, which will happen, it will happen. Well, you want to be able to execute on that, right? And buy that dip. Just the same way when we're at all-time record highs, you want to be able to sell that high. But you're not going to know it's the all-time record high until after. And so are we at the all-time record high? Probably not. In terms of like where we're going in the next few years. But locally, yeah, the rotation is underway, and it's going to Ethereum and the Ethereum adjacent chains. But I would focus on the chains that have not performed price-wise this cycle. Like, I don't know that we're going to see Solana really be able to compete with Ethereum at this stage, because it's really about Ethereum layer 2s, DeFi protocols built on top of it that already have the usage and interconnectivity on Ethereum. Arbitrum, Robinhood, etc. Solana doesn't have that. And Solana has already performed very well this cycle. And the billionaires, they want out. They want out. The billionaires are now rotating into Ethereum. And so this is the floor price right now. This is the floor price. Everybody's already in Bitcoin, so that's the ceiling. Floor, ceiling. You want to be at the top or you want to be at the bottom? Well, if you want the prices to go higher, you want to be at the bottom. And so that's kind of my thesis. That's kind of my outlook on the market. Is it 100% going to occur? No, nothing is 100% in these markets. There's always risk. But that's the way I'm looking at it. These companies are changing their business models in the midst of a bull market. How can you not be bullish on Ethereum? Anyway, hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up. Hit the subscribe button. Let me know what you guys think down below. Do you think I'm just hyping this up? Do you think I'm not getting it? Or do you think I'm on point? Do you think that this is the rotation into Ethereum and this is going to be the final alt season of the cycle? Let me know. See you guys in the next video. Invest responsibly and crypto on.